Wages and salaries from an employer will appear on nearly every return you prepare. In many cases, it will be the only form of income that appears on the first page of a taxpayer's 1040. A very simple process indeed. Annually, every employer is obligated to send each employee a W-2 which provides all the information a tax preparer needs related to the taxpayer's employment. With this information in hand, it can be a simple process to enter salaries and wages on a client's tax return. In a moment, I'll speak of what information is important on the W-2 and where to place it on the tax return. In addition to traditional wages and salaries, there are other forms of income, although infrequent, that we should discuss. They are often referred to as fringe benefits, and when taxable, they will usually be included in wages on the W-2 provided by the employer. Sick pay, for instance, should be included in the W-2 with other wages and salaries and is a taxable benefit that's normally provided by the employer. Also along with that is vacation pay. Paid vacation is taxable and should be included in the W-2. Employer payments for group term life insurance are not taxable when the amount of the policy is $50,000 or less. If the amount of the policy is more than $50,000, the excess premium amount is taxable and included by the employer as wages on the W-2. Let's discuss one more fringe benefit and then we'll move on. If the taxpayer uses a company vehicle for personal use, the cost of the personal usage should have been included as wages in their W-2. For instance, Susan is the president of a corporation and drives a company car back and forth from home. She keeps mileage records of her personal trips. At the end of the year, she declares that she used the company car 6,000 miles for personal use. The company's payroll department then multiplies the miles times the mileage rate that the IRS publishes and adds that amount to Susan's wages. For instance, if the IRS published rate that year was 50 cents, then $3,000 would be shown as income on Susan's W-2. What if your client took the company car on a business trip and her husband and children went with her for fun? Is the mileage taxable? No. If the purpose of the trip was business, then the entire mileage is not recorded as income. There are other employment-related items that may not appear on the W-2. If they're not included, it's usually because they are not taxable. Free services offered to employees may be non-taxable and therefore not reportable. To qualify, the service must be in line with the ordinary course of the business, and there cannot be any substantial additional cost. For instance, at our company, we encourage all of our employees to enroll in our training for free. It's certainly in line with the purpose of Universal, and there's relatively little incremental cost. When an employer provides an inexpensive item, which is not cash, such as a turkey at Thanksgiving, this is called a de minimis benefit and does not need to be declared as income. The general guideline is that anything under $50 does not need to be declared. So what if it is cash or a gift card that can be redeemed for cash? Then it is income regardless of the amount and should have been included in the W-2 by the employer. How about educational assistance provided by an employer? Yes, employers can provide training to employees, and that is a non-taxable benefit. When an employee receives disability pay, whether from an insurance company or the employer, how you handle the income will depend upon whether the employer or the employee paid the disability insurance premiums. If the employer made the insurance payments, then the taxpayer must include the income in their tax return. If the taxpayer made the insurance payment and received disability payments, the income is not taxable. Since most disability programs are paid for by the employer, if an employee receives disability payments, they will be taxable most of the time, unless the employee has reached the normal retirement age of that employer's company. At that point, disability payments become non-taxable income. One word of caution: don't confuse disability income with workers' compensation. Workers' compensation is tax-free. We don't even consider it as a tax preparer.